On April 6, 2026, the traditional annual self-assessment tax return is being retired for hundreds of thousands of people. Under a new government initiative called Making Tax Digital, or MTD, we are shifting away from that single yearly document. Instead, you will be required to submit 4 quarterly updates throughout the year, followed by one final end-of-year declaration. This specific regulation targets 2 main groups: self-employed sole traders and property landlords. Voting to adapt to this new filing schedule triggers a brand new points-based penalty system. To avoid these fines, you have to audit your personal business setup and prepare your accounting records before the 2026 deadline arrives. This timeline chart maps out exactly when you need to comply. The rollout begins in April 2026 for those earning over £50,000. In April 2027, the threshold drops to £30,000, and by April 2028, it captures anyone earning over £20,000. Notice that these target numbers are defined by a metric called qualifying income. Here is where many people get caught out. Qualifying income means your gross turnover before you deduct a single expense. If you invoice £55,000 but have $10,000 in expenses, your profit is $45,000, but your qualifying income is $55,000, meaning you hit the threshold. And if you have multiple streams of income, the rules require you to combine them. A £30,000 web business plus $25,000 in property rent pushes your total to $55,000. If you operate multiple distinct businesses, you must file a separate set of updates for each one. That web business and rental property combination means submitting 8 separate quarterly updates every single year. Calculating your gross income incorrectly is the most common way business owners will accidentally miss their legal mandate and end up facing penalties. If you do miss a deadline, the old automatic £100 late fee no longer applies. Under the new system, missing a single quarterly update earns you 1 penalty point on your record. If you accumulate 4 points as a quarterly filer, the system automatically triggers a £200 fine. There are also separate penalties for paying your tax late. In the first year, these kick in when a payment is 30 days overdue. By year 2, that grace period drops to just 15 days. Because HMRC designed this structure to punish persistent delays, keeping your digital records up to date is now a strict financial necessity. To ensure you meet HMRC's requirements, you can follow a straightforward 4-step plan. Step 1. Pull your most recent tax return. Locate your gross income figure to confirm exactly which year you are required to start. Step 2 is acquiring the right tools. HMRC will not provide a free portal for this. You have to select compatible third-party software or bridging software that links your current spreadsheets directly to HMRC's system. Step 3. Stop using paper receipts. Begin logging your income and expenses digitally today, so the habit is formed before the laws take effect. Finally, Step 4. You or your accountant must actively register for Making Tax Digital through the government gateway. You will not be enrolled automatically. Executing these 4 steps right now guarantees a smooth transition when your deadline hits. There are a few legal frameworks that sit outside of this new system. For example, investors can structure their property business as a limited company because companies are currently exempt from MTD for income tax. Similarly, if you keep your total gross income strictly below the active thresholds, you can legally remain on the old annual system. HMRC also offers a digital exclusion exemption. If you genuinely cannot use software due to age, disability, or religious beliefs, you can apply directly to the government for relief. Understanding these structural options gives you the ability to intentionally engage with the MTD system, or legally bypass it entirely. Transitioning to Making Tax Digital is a major administrative shift, but it is entirely manageable if you prepare early. Check your gross income to find your deadline, familiarize yourself with the points-based penalties, and complete the 4-step preparation plan. The best place to start is the gov.uk software finder tool to locate the right digital record-keeping solution for your business. By organizing your accounts today, you secure your compliance and keep your business running smoothly and